Guys, this is Jen with some tax tips and the early ad starting on February the 4th. And you know I've always told you most of these ads are congruent, the same. They run from week to week to week, but only on the difference is some weeks you'll have ECBs with certain items and some you don't. And don't forget to scour the aisles for the clearance items as well. Thank you for looking, liking, and subscribing. Thumb me up, guys. Love you. See ya. Hi, fam. This is Jan. February the 4th. Early ad. Read all about it. You got some P&G products like the Tide, the Game. It's $5.44. Use the $2 coupon sent to your card. Pay little as $3.44. You got some Tide Pods. $4.94. Send the $2 card to your $2 coupon to your card. Pay the $2.94. We got the old all buy one get one free and all those the snuggles. We probably gonna have some dollar off coupons on that. And you know we enjoyed those $2 manufacturer coupons off of one we had done last month and the month before. And don't forget, there's a hot item right there. It's hot. Arm and Hammer, $1.99 off coupon, little as 99 cents. Take a $10 ECB, get you 10 of those. Use the $1 manufacturer coupon and pay the tax only, friends, or just do it in 2 or 3 increments if they allow you to at the store. Just read the coupon, make sure it says that you can use them like that. Okay, friends? And then you're going to have a spend the 30. You know, you got to stand by your Scotch paper towel and your Scotch bath tissue, your Lysol is BOGO. Buy one, get one free. Your Ajax, your Clinics, 99 cents. Duracell batteries, $11.99. You know we have coupons on that. Be conscientious on those BOGO items on these spend the 20s and 30s because every time I do that, the free item is not being equitable applying to the total, okay? So you might have to throw something else in there, get your totals up to 30, and then take some bucks or whatever you need with your coupons to get that free item that you truly wanted, okay, friends? It's up to your decision. We got Colgate toothbrushes, $3.99. You're going to get back a $2 ECB. You got a $1 coupon on those. Make them as little as 99 cents. You got the Fruiters. You got a L'Oreal products. You got different hair products. Okay, friends? And there's the Pampers. Hot deals. Pampers, baby wipes as well. And you're going to get back $10 ECBs. And you have to do those accordingly. If you have any CVS CRTs, go ahead and use them, friends. And also on the cosmetics, we're going to have another mystery item. Mystery either Revlon, what is Maybelline, we get in the L'Oreal. So whatever it is, use it, friends. And don't forget Valentine's Day is just around the corner, and you can stock up now on some great items. And look, there's some fragrances starting off as $12.99. Purchase 2. Use a $5 off fragrance coupon, and you'll get back a $10 ECB. And we do have the standby physician's formula. That's also $14.99. Get back a $10 ECB. So continue to mix and match. Love you, friends. This is Jan. Hey guys, this is Jan with Show the Girl. I just put together a few of the scenarios and ideas that you can utilize for February the 4th at the local CVS, okay? I'm not going to go into each page word by word. I just put together something so it's a guideline so you can look at. Love you. See ya. Hello, friends. This is Jan with some few tax tips that are very important for you to recognize. I'm going to talk about the Schedule Cs and some record keeping, and also irs.gov, and also what to look for the prepare tax ID numbers and enrolled agents. Okay, so let's get started. You can use the Schedule C instead of a Schedule C if you operated a business or practice a profession as a sole proprietor or qualified joint venture, or you are a statutory employee and you have met all the requirements listed in the Schedule CEZ. So the Schedule CEZ is, you can use that if you had for profit, if on your tax return. Also, you cannot have any losses over $5,000. So that's the difference between the normal Schedule C, which you use on your 1099, and the Schedule CEZ is a shorter version of that 1099, the Schedule C. Okay, friends? So if you don't have any losses over $5,000, for example, I had a client who said he owned a boat, and he told one of my employees that his boat expenses and everything was about $100-some thousand for the fiscal year of maybe 1988. Okay, friends? And so I looked at his wages, and his wages, he only made $40,000 per year. So I had to ask the tax accountant to go back and ask him some pertinent questions. Does he have any rental properties, or does he have any other kind of residual income, any interest that's coming to him from bank accounts, or does he play the stock market or anything like that? Because that's a red flag for an audit. If you're going to tell the IRS that you had all these expenses and you only made $40,000, and you can't account for how you were able to go out and purchase all these items, and you didn't have the collateral or the finances or the income to support this. Okay, friends? So that's another tip, that you almost have to be conscientious of what you're saying and what you're doing, and also have your written documentations. That's why it's always said to keep good records of business and personal income separate. You must keep your business, your 1099 income, your YouTube income separate from your personal income, friends. Because in case you're audited, you can show, well, I had to buy, so I had to pay for these props to make the content and these videos. I had to get the lighting. I had to use a visual wall. I had to go to a location. I had to drive using my business miles to get to that particular location to make this more lucrative, my video and the content. So always remember, the next thing, I'm jumping down from quarterly tax. Separate your business miles from your commuting miles. If you have only one vehicle, you use that vehicle during the daytime as business, make sure you keep an accurate mileage of how many miles you drove around to the business adventures or whatever you're doing. But if you know you're using that also for personal, you got to say, when did you stop doing the business hours and that vehicle became your personal vehicle? Okay, friends? So it's not hard to do, but you must keep an accurate ledger on the business miles from your commuting miles. For example, I had another client, about 1991. He came in and stated to one of my accountants, he said, well, I had driven 150,000 miles. And so she was going on and asking him the pertinent questions. So you have accountability, your mileage, and you have receipts showing where did you go. Did you go to the next town over, which is only 10-15 minutes away, or did you drive from Louisiana to New York, or from New York to California, or from Texas to New Mexico? So you have to be congruent, the same about what you're telling these tax preparers or doing your taxes, so that won't be a red flag. Mileage, the home office, just those kind of things are red flags to the IRS, because they want to make sure that you're telling how many miles, you're differentiating between personal commuting miles and also the home office, like I stated before. It can't be you sitting in your bed and you saying that's my office because I got a laptop computer and I'm doing making videos and sending them up to the cloud, to back to YouTube and back down to the whole world can see my. You can't do that, friends. So you have to be able to show and tell the IRS this is a office located inside the bedroom, or this is an office located inside my apartment, my house, or you have to go to a physical office where you call that a business. Okay, friends? So those are red flags for immediate audit. Mileage and also the location of your business. So be careful with those. Okay, friends? And another thing, I want to jump back to quarterly tax. That is, if you feel like you're going to owe the IRS and you did not have enough money to pay them on April the 15th or whenever, the taxes or your taxes are due, send in these quarterly payments. There's 4 payments per year where you can add money into the account to the IRS. So when you get ready to do your taxes, and you may say, "Oh goodness, I'm gonna owe $1,000, but I sent in 800. So all I need to take out of pocket at that time is $200 to the IRS. You can increase it as you go along. Okay, friends? So that's one tidbit. Okay, this is Jan. This is a long form of the Schedule C. It's normally used for profit or loss. So if you made a profit in your business, or if you had any losses, so you can show your supplies, you can show your expenses, and also you can always let them know on this form your mileage, when you put a vehicle into operation to use as a business, and your depreciation, like your marks, computers, if you purchase computers or you purchase any kind of items, fax machines, furniture, business furniture, desks, anything that is going to help to grow your business, okay, friends? And also if you had done any advertisement, like business cards, made flyers, or did any radio advertisement, any commercials, or anything like that, okay, friends? But you must keep your written documentation on that. Guys, this is Jan. What I'm going to tell you on this particular page right here is pertinent, urgent, very important. Most PITN requirements, that's PTIN numbers. These are 9-digit numbers that all entitles must be entries must be obtained from the IRS. We started this back, I think it was around the early 90s when they came out with it at first. But back in the 80s and stuff, we didn't have to, we used our Social Security numbers on most of these tax forms that we were doing for our clients, okay? And so the IRS came up with the PTIN. And when it first came out, we had to pay, I think it was either $80 or $85 per year to get these PTIN numbers, okay? And get our applications renewed as well. And they do require background checks, friends. You must do, if you know, to be satisfied, whoever prepares your taxes, if they have a PTIN number, guess what? The IRS has done an extensive background check on those people. And if you look there on the green card with Juan Gomez, it has the numbers right there. If they have a Social Security number on that, that is not an accurate PTIN number, because guess what? The IRS does not use Social Security numbers on the preparer identification numbers, okay? Even as enrolled agents, we have to have a PTIN numbers to do the tax returns. And the only difference between the preparer and that is because an old agent, we can adjudicate cases at the IRS and also in the court of law. Okay, friends? Whereas the normal preparer will just show evidence of what the client tells them. And a lot of times, like I said about audits, is your word against the client and your written evidence against the IRS. So if you have your written documentation, guess who's going to win out? You being the client. But if the accountant, preparer, or whatever, they don't have the written documentation and you didn't give them such things, if they ask you, they will write in their preparer notes that you, the client, did not give them the necessary items or show the documentation, or say you have the written documentation, to solidify your tax return. They may send your tax return into the IRS, but guess what, friends? If you audit it, you're basically on your own because you didn't do your due diligence and your documentation. Most of the time, the accountant, preparers, enrolled agents, we're going to do our due diligence because guess what? We don't want to pay any penalties or end up as a criminal law. You can go to jail for filing a false tax return. Okay, friends? And another, excuse me, another thing, it says for the PTIN preparer, an enrolled agent, look on number 7. If they had any prior convictions within the last 10 years, guess what? The IRS wants them to fill it out. Tell them why. Because if they do, they don't fill it out, they're not going to be getting a legitimate preparer ID number from the IRS. Because if you go to someone, they can't show you the documentation of the PTIN numbers or required documentation that they have to do your tax return from the IRS, that's a red flag. But you progress at your own expense, friends. So always do your due diligence and making sure the person that's preparing your taxes has everything accurate with the IRS and everything is legit, because you don't want them to get you in trouble as well. Because a lot of times you walk in these doors and walk in these offices and you have to use accountants that want, what I'm trying to say. You can say, well, I had $20,000 of expenses, and you may know darn well you only had $2,000. Or the tax accountant say, well, here I can show you how to make a larger refund. But at the bottom line, if you audit it within those 3 years, friends, guess what? They can go back longer than 3 years. But I normally tell my clients, keep all your paperwork and documentations up to 7 fiscal years. No, at least 3 years, okay? Because that's what the IRS, they can go back and audit you on those lengthy years as well. Okay, friends, so just be cognizant of who is doing your taxes and make sure they're legitimate and have that PTIN number, that 9-digit requirement number from the IRS. Because you see number 5, if you don't have a PTIN number, can they still prepare taxes for the compensation? No, they must have a PTIN number to prepare taxes and tax returns and compensate for the fiscal year of 2018. So if they can prepare your taxes, let me back up. But if they sign that, they must have the PTIN requirement from the IRS. But if you have some people that you ask them to prepare your taxes and they're not signing it and you're audited, guess what? You're on your own. Okay, friends? So if you're paying someone to file your taxes, make sure they sign it as the tax preparer or the accountant at the bottom of your tax form, your 1040. It's particular on the first page of your 1040. And then your signatures is there as well. So those are the legalities. And always remember, and they're doing your taxes, I always tell my accountants, put your preparer notes in there, because that solidifies what you are telling your clients at the time they're doing your taxes, and also their client notes, and that saves you with the IRS, because this is what you told the accountant, the tax preparer. You did not tell them that you owned an island over in New Guinea. Okay? So always be conscientious and protect yourself as well. Okay, fam, this is an early ad with some tax tips for February the 4th, 2018. Just glance over the ad, and I put down a few scenarios, whatever. I'm not going to talk long because it's already lengthy, where I'm giving a little tips from the IRS. Thank you for looking, liking, and subscribing, and don't forget to comment down below. Thumb me up, guys. Keep your heads up. Stay positive. Save that money. Love you, love you, love you. See ya.